when the market mentality gravitated back towards stocks. And everybody, we're getting back to the mentality of chasing stocks, chasing returns, chasing performance. Gold will become a liquidity source for stocks, which we've seen that. So gold's not going anywhere, so money's not flowing into gold. It's not really flowing out of it, but it's also not flowing into it. Let's talk about markets. Here's what you need to know before the bell this morning. Market's doing just fine, sitting right. It's actually just touched mildly yesterday. An all-time high for the markets. Money flows have been improving, so that's actually a good sign. This, what we talked about previously is we had this negative, and we still have a negative divergence in money flows, but you can kind of see it's been a lot weaker. But we finally kind of went through this weak period of money flows, and that's been improving here over the last couple of trading sessions in particular. So that's good. Even though money flows are improving, markets really haven't gone much of anywhere. Relative strength has improved a bit, still have a negative divergence there, very close to triggering a momentum buy signal. So if we can do that, and this market can break out to all-time highs here, likely we're going to try to push, a bit higher. But speaking specifically about Nvidia, since its report, kind of yesterday, like I said, it was sitting right at all-time highs as well. It had a nice rally here over the last couple of days. So again, won't be surprising this morning, down a little bit. Again, when I checked it a few minutes ago on a real-time basis, it was trading down about 1.5% early this morning. Not a big deal at all, particularly after this run. Still in a sell signal, got a negative divergence here, of course, in relative strength as well as the rest of the markets. But money flows were improving as well, actually going into earnings. We saw an uptick in money flows yesterday in particular, so people were buying the stock ahead of earnings. We'll kind of see what happens today. Again, I wouldn't expect a big downside draw out of the out of Nvidia today. Again, the earnings were very good on a fundamental basis, so from a fundamental perspective, stock still, operating, really kind of kicking off on all cylinders at this point. Again, just not as good as kind of some of the most, opulent expectations that were sitting out there. But overall, again, nothing kind of wrong here. Again, just, it's that whole market continues to operate in that kind of that fashion. But, kind of looking back at, kind of other areas as well, looking at the IWM, small cap, kind of mid cap space, it's been performing a bit better on a buy signal, relative strength improving. Seeing money flows kind of tick up here as well. It's early, but kind of flirting here with its kind of previous highs here from just kind of the recent period. The one concern about small mid caps, and again, just you remember this, about 40% of these companies have no profits. They're non-profitable tech. Also in that category, 40% of them are what we call zombie companies. In other words, they survive on debt issuance in order to continue to operate. So again, this index isn't super healthy in terms of looking at the underlying companies that make up that index. But nonetheless, we're seeing a lot of chase in this. This is part of that meme stock kind of mentality that we have in the markets at the moment. A lot of chase here, even though the fundamentals don't make it. But one thing to remember about small mid caps, they are very, very economically sensitive. They don't have the flexibility that large caps have to kind of navigate a weaker economic environment. And we are definitely seeing, whether it's employment data, whether it's kind of the ISM manufacturing services data, definitely seeing some weakness in the economy that will get reflected ultimately into small cap, mid caps and their earnings. So again, as we get further into this year, just keep a watch on that. Again, small cap, mid caps have been a huge laggard relative to the large cap index. So if you're running kind of an allocated model of large cap, mid cap, small caps, you've really kind of dragged on your performance over the last, couple of years in particular, coming out of October 2022. That's really kind of been a drag on performance versus just being in large cap stocks. Outside of that, kind of keeping a watch on yields. Yields just haven't done a whole lot. They're just kind of sitting here right around 4.2%. Again, take a look at economic growth at about 2%, seeing inflation around about 2.4. So, yields are trading about where they should be right now. But again, just not really going much of anywhere at this point. Again, just kind of really kind of stuck in this range. And we've been stuck in this range here for quite some time. And again, a lot of attention is just kind of now, there used to be a lot of focus every day. It's like yields doing this, yields doing that. And they've been so boring lately, everybody's kind of forgotten about that. It's almost kind of the same thing that we see with gold, which is also not really done much as of late. It's just been in a very similar kind of trading range. And we talked about this before, is that when the market mentality gravitated back towards stocks, and everybody's, we're getting back to the mentality of chasing stocks, chasing returns, chasing performance. Gold will become a liquidity source for stocks, which we've seen that. So gold's not going anywhere, so money's not flowing into gold. It's not really flowing out of it, but it's also not flowing into it. It's going into other asset classes. Same with bonds. That's why they're not going anywhere. The focus right now in stocks. So liquidity is being pushed over into the equity market and really not so much in the risk off category, which isn't surprising right now because it's all about risk on in the market at this moment. Anyway, that's what you need to know before the bell this morning.